Boom! We are live. Happy Tuesday, everybody. I'm just kind of shocked right now at everything going on in the market. You got Tesla down 10%, the S&P dropping again. Yesterday, it's just more of the same, just crazy choppiness going on, right? Yesterday we were down all day, then had a crazy end of the day rally. Now we've given up all those gains. Essentially, the S&P's down almost 2% right now. But luckily, I've got a guy who's going to join me on stream, who's been doing this for a while. He'll talk us through kind of what's going on and what to do about it, how to trade it. Of course, we've got some big earnings coming up this week. Google tonight. So without further ado, I'm going to go ahead and play the intro and bring my man David Green on. We'll be doing some live trading. Let's hit it.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, guys, let me go ahead and bring DG on the stream. David, how you doing today?
What's up, Aaron?
Not much. Like I was saying, we were talking before. I just don't know how else to describe these markets besides a lot of chop, just up and down. We're kind of barcoding right now, although it definitely feels like there's been more red than green the past week. And I don't know. I mean, can you give me anything to make me feel good about the overall markets right now?
Oh, that's a good question. Is there a chat? I can't see the comments or anything.
Here, let me fix that in the settings for you.
Thank you.
You might need to.
No, I got nothing that's going to make you feel any better. I thought.
Okay.
After yesterday's rally, at the end of the day, that maybe, that could have been the start of a small leg up, but we've given all that back and then some now. So, some of these stocks, the Nvidias and the Netflix and might even Softy's got earnings tonight. So my thinking is tonight, and I don't even think it matters what the numbers were or anything in either Microsoft or Google, right? They're both coming out tonight. If we get a negative reaction to that, I don't think it's going to be pretty for the market.
I don't think so either, although I am anticipating, I might be on the kind of minority here, but I'm anticipating at least Google to report some strong earnings. I've seen some reports about kind of, some preliminary like advertising reports and stuff. And I'm just making that prediction. I'm not saying, it's not, of course I don't have a crystal ball. I have no clue, but I'll just say I'll be surprised if, down the road, yeah, Google will run into some trouble if we do have a downturn in the economy. Companies are spending less money on advertising, whatever it is. But I don't know if that'll be reflected in this quarter's earnings report. But David, I did turn on your comments. So if you're not seeing them now, you'll have.
The problem is it hasn't mattered what the earnings are in some of these stocks. That's the problem. It hasn't mattered that they've beaten on top line, bottom line. It just everything is getting punished right now. That's just the market that we're in. Someone in my room just pointed out that Google earlier today bounced off a monthly level around 2376, and now we're heading back down to that level. Yeah, 10 for 1 splits coming in Google, 20 for 1 in Amazon, and Tesla's doing another one, I think, in September or whatever. Generally speaking, when these guys split something like that, Muhammad, you might get a few days down, and then they're, if you like the companies, they're good putaways again.
Well, it looks like Tesla's doing a stock split today. What's going on there?
Yeah, which makes, listen, we know the PE in Tesla's 192 or whatever it is, right? So. Again, that doesn't mean anything anyway in Tesla, but somehow today they're all worried about Elon being able to run both companies. Now, this was all out yesterday, right? Everything was out yesterday. And now today, for some reason, they're all worried that he's not going to be able to do that. So
yeah, and I think there's also some worry out there that maybe he'll have to sell some Tesla stock to complete the Twitter deal, or maybe down the road to pay off some of the loan that he is taking out for Twitter. So either way, just
again, the only thing that matters is price action, right? So none of these, whatever comes out in the news or anything, means anything. It's the only thing that matters is what the stocks are doing, right?
Well, that's what I thought. That's what I thought was so interesting. And we're looking at dailies here, Dave. Or no, this is
that's a 5 minute. We'll go to the
5
daily.
minute.
We just missed a beautiful spot on the daily and got an 11-point bounce. We were out there bidding. You guys can see my 200 EMA on a daily, which is usually pretty good. We had it at, we'll call it 895, right? That was our 200 we were bidding out there. And we go to the 5 minute chart. You can see missed it by like $3 and got a $10 bounce off that. So that becomes a very big level on the downside, this 895 level, if it doesn't hold.
Yeah, if we break that 895 on the downside, we could be falling even further. And of course, Tesla is one of the biggest weightings in the S&P in the Qs. So even if you're trading those, just be mindful of where Tesla's at on the chart. But one thing I thought very interesting on Tesla on the daily here, David, was Tesla reported earnings last week and they were really strong, right? You had like record revenue, all this stuff, and literally within 24 hours of the earnings report, it was trading below the previous close. It gave up all of its earnings gains almost, within the next day. So then I was thinking, and it's like you're saying, the only thing that matters is price action. The only thing that matters is people aren't doing what they used to do with Tesla. And it was, these great earnings, the stock would go up 30. It actually was lower after the earnings report.
Yeah, and listen, you're talking about a $1,200 stock, whereas times before it was $100, $200, $300, and $400 stock, right? So, same thing happened if we go last time, right? When we made record highs after the earnings, we got to 1243. We gave a bunch of that back. Earnings before this, nothing but down. So I have a nice spot, and again, we've been below this too. And I mean, a couple of months ago, but 811. We'll call it 812. It's 811.88. Is really my next spot on a weekly chart. That's the next spot. And again, we've been below that too. I think it's going to be important what happens with Microsoft and Google tonight as far as going forward with the market. That's what I think it's going to be.
I agree. I mean, because of like you said, if the earnings aren't great, or even if they are decent and the market decides they don't like them, then we could be in for another 10% drop on the Qs. I mean, honestly, like who knows where we'll be.
Well, you want me to give you my technicals? It's not pretty. I can tell you that.
All right, let's do it. I know last time we were talking about SPY, you gave me a level down in like the 330s or something that if we drop to.
Here we go. Okay, so first, let's go to the daily in the SPYs, right? So we had 440, okay? And we kind of played around with that for a while. But once we got below 440, I mean, that was a signal to just get out and get short, if anything. Here's my weekly, guys. And this is why I thought we had a little hope yesterday, right? Our weekly was 426. And we've been around it a few times. But we got below that yesterday for like 418 and change and closed at 429. So I thought maybe there was a little hope for us. But when we broke 426 again today, that was a signal again to get short. And here we are at 419. Yeah, my weekly support is 360. That is 30% from the highs, about 30%. I guess that's a crash, right? I mean, right now we're 13% below. I don't know what the exact number is, right?
I don't know what the exact number is for a crash. I know a bear market is constituted at 20. So we haven't even entered a bear market yet. But so we're down, like you said, 13% from the highs. Where were we when we got down to these levels around like early March and bounced? Are we below those levels?
I'm looking now. A recent low was on mid-February, and it was 410.65. So, again, that becomes a pretty big level too. Maybe we get a double bottom on a weekly chart. If we get down to 411, that's an important spot to hold technically, right? Because let's watch that, because if we get down there and it looks like we could bounce again, I mean, even if it coincides with earning, whatever it is, but if it again falls through there, then I don't know. I took all my I went a lot more cash, I think, after the past few days, because to me, it's not just the fact that we've had these these big red days at the end of last week. Yesterday again was pretty red all day, and then we had that rally at the end of the day. But it's the fact that, like, you don't see
the S&P 500 down 2.5% in a great market, right? You only see that if there's fear out there.
That's right. We're looking at the VIXY right now, which we know is the fear index, right? And we go to a daily chart of this, okay? This is a nice rounding up pattern, and we're testing the highs, from a couple of days ago. Let's go weekly and see where we are now. Look, we were as high as, 38 a few weeks ago in the VIXY. So there's definitely some fear coming back into the market, without a doubt. We're just going to get me some fear here. This is a scary time for long-term investors. All right, let's just call a spade, right? It is. This is a scary time for long-term investments. If you're young, guys, just don't even look. That's what I tell people, right? If you're young and you got a lot of time in this market, don't even look. I don't want to look and see my 401k down 15% or 20%. I am older, so I haven't been in the market at all for a while in the market. But that being said, God forbid we get to this weekly level, I'm going to be an investor again. If we get to this weekly level, I'll start going back into the market with 25%, to begin with, and add down there from there until I get to 100%. So even for me, those are the levels that I'd be looking to get back in. I haven't sold any Apple, which I own for a long time. And the last time I sold it was when it made an all-time high. I think back at the 180s or whatever that was. Yeah, 180. Earnings are coming out in Apple, right? Thursday also. I think Thursday after the market. Yeah.
April 28th after hours. So, yep, that's Thursday.
Yes. Yeah, so, we're coming to our first support level in Apple on the daily, and we just about hit it yesterday. We'll call it 158. We're right there. Weekly, below that, we have 148, and then, God forbid, 108. So, again, we have a big gap down if we don't hold the levels that we're, anywhere near right now. If Apple ever got to 108, guys, I would get back into a full position in that stock of everything I've sold. I don't think it'll happen. 149 is a big spot in Apple. That's our weekly support level. So we'll see what happens with the earnings with that on Thursday night. The thing with this market is we're susceptible. And look, it's been a difficult trading market I don't know how many of you guys out there that are watching us now are trading on a part-time or full-time basis. But you better be patient. You better be disciplined, and you better be using stop orders in this market, because that's the only way this market can be traded right now. We have cut our size, which is just prudent to do when you have things like this going on. You cut your size, you try to pick up a couple of banana skins here and there, and that's it.
Yep. I mean, for me personally, I was actually doing really well. And then end of last week, I lost some money staying long in some positions and some options positions. And it wasn't even just that I obviously I was trading the wrong way. I think I was long SPY at one point on one of the days where we were down a lot. It was just my risk management was off. I was risking way too much because I had made some right before. And I realized that was my bigger problem. And I'm going to be wrong half the time, or hopefully a little bit less than half the time. But if I'm better at managing my risk, then I won't run into as many issues as like last week, where I lost like half my portfolio in 3 days.
Yeah, you can't let that happen. That's the bottom line. You just can't let that happen. You got to keep the tight stop when the market is like this. You guys, if you remember last time we were here, Aaron, I don't know if anyone jumped on this. Remember we were talking about Boyle and nat gas?
We did. I actually I gave it out on here. I bought some cold at like 720, and it went up 30% in 2 days. I bought some KOLD, went up 30%. I think I had some people out there that I know got in with me. Spencer tried to get into the cold trade, but he went for a limit order and never got filled. So
no.
I know. So I was texting him the next day, like, "Oh my God, let's go. Did you see cold?" And he's like, "You realize I never got filled?" And I was like, "Oh no, I forgot. Sorry."
Yeah, this was our classic reversal swing trade. There was a lot of money to be made in this, even in the cheap one, cold. I think it went to 11 cold or 1050. But here's the setup, guys and girls. We were talking about it when we were here, and this day, that was the third day up. We had a 90 relative strength in Boyle. And it made a high of 113. The next day was beautiful to cash out, right? It went down.
Yeah, it's exact.
It went down $25 the next day.
Yeah.
Right.
No, so I'm looking at it right now. I guess I got filled at 7:29 on April 18th, and then on April 19th I sold at 9:36. So 7:29 to 9:36 in one day.
Well, that was a dead low. We started early. We started buying this at 850. Jay, yeah, we started early. We bought it at 850. We bought it at 8, and we bought it at 750.
I added more at 8. I added 43 shares at 8, and then sold again at 9:36. Some of my position, and then I held some and sold the rest at 10:30. So actually, I could have made more if I would have held on more.
10.95. Jay, just so you know, whenever we do a swing trade, I'm never going to get the top, and I'm never going to get the bottom. Right? It's just not going to happen. But when it sets up, and Cold's an $8 stock, right? Well, I don't know. I put it out to my whole group at $8.50. That's where we started buying it. That was my Twitter. We started at 850. We bought 850. We bought 8. We bought 750. That's what we did in that, and then we took advantage. And some of us were short the Boyle, the actual stock Boyle, because it was shortable for some of us, and that went down $28 the next day. So again, an $8 stock, you're saying you can afford to average into it a few times when we get really stretched out like this. No, I never got. So that was our Boyle trade anyway. When we mentioned it on here, that's when Aaron started buying it. So we couldn't have been too far off the bottom. I never got.
I think I might have bought it the next day. I think literally I was
so you got you got a lower price the next morning.
Well, let's see. No, the 18th I'm looking at now was on Monday. You usually come on Tuesday. I don't know. I guess I was just been watching it since you brought it up the first time, and then I was like, all right, here's the time I'm finally going to get it.
This day when it made the all-time low, or the recent low anyway. So that was the day after we came on. I think that was Wednesday. That is correct.
Okay.
Yep, that was the day after we came on. I have not got back into Labu yet. Nope. I was actually looking at it today, and let me see where we are. Yeah, I mean, we're getting there on a weekly. We have some support here, though. Let me show you what I was looking at. Today's chart, 5-minute chart. And again, this stock, a couple of weeks ago was like $16 in Labu. So I'll show you where we're going to start, guys, just so you know. I think it was around 840. Yeah, if Labu gets to 840, we have orders out to start buying Labu for a swing trade, MD. Yeah, so around 840, we'll start swinging at. I'm also looking at SoFi again. We have not been in this. We got all of our trade. We made a bunch of money in SoFi. I think I have an order out right now in SoFi. Yep, $5.50. I have an order to start getting back into SoFi, and that would be a long-term trade again, down at $5.50. Hold on. If we break 415 in a SPY, we are heading for a crash. Ali, I don't know about that. I mean, who knows? At this point, we just play what we give us. I know I have 360 and lower to start getting back into the market in a big way. So I have no swing trades right now. Okay? No swing trades. All right? And Jay, even if it went down 20%, you keep adding to it when we get into a position where things are getting very overbought or oversold. And again, for everybody out there that is in their long-term stuff, just close your eyes. This too shall pass, guys. It always does, right? Every time we've had a supposed market crash, it's been nothing but a great buying opportunity. So, and as far as trading is concerned, I'm like hesitant to be short when these things start rallying up a little bit, because we can have that rip roarer that we had yesterday.
Yeah, because everyone's trying to go short right now. People are gonna have to cover. Next thing you know, it's a, like you said, just reverse on you. So I don't know. I'm with you. I'm more trying to wait and see when I can get long rather than trying to come out here and short right now and everything's already down 15%.
Yeah, I agree. I agree with you 100%. I'm just talking from a trading perspective. Yesterday after 2 o'clock, if you decided to short anything, you got crushed. You know what I mean?
I want to
Not my cup of tea trying to find the two bottom. Jay, I agree, and we don't do it very often. Just to address Jay's comment, trying to find the bottom too hard. I don't swing trade an awful lot, and the times we swing trade is when things get really overbought or oversold, and that's the only time I get into swing trades. And usually it works out, within a couple of days. But I'm not trying to find bottoms in anything. at all. I'm just looking for trades. That's what we do. And at SoFi, I don't mind starting a trade if it gets to $5.50. That's the bottom line. And I'll hold it. You know, we've been in and out of SoFi a bunch of times and have done nothing but make money on it.
Don't talk about. Well, you started talking about SoFi, and look who appeared.
Right.
There he is.
What was I summoned? Was I summoned? I heard SoFi, and I heard a whisper, and I came running.
I tried to get you out of it at your price at $13.
Yeah, that's true. He did
a couple of times. And what was it? Aaron was just telling me that you missed the cold because you didn't want to pay up a little bit.
Yeah. So Tesla.
Yeah, I mean, what a bunch of crap, right? Tesla.
So
today they decided that Musk can't run both companies, and they're worried about financing, and they're worried about all sorts of stuff.
You know what's more surprising to me than Tesla today is actually Twitter, because Twitter is down to $50. So Twitter, like, the news was out yesterday during the day, and the stock was like, all right, at 51 and change. All right, that's where it's going to be. It trade at 51 all night. 51. Right. All right, 51. That's what the risk arbs are pricing. Done. We're game over. Nope. Because now we're down $1.50.
I put a short out on it yesterday with both options and stock.
I mean, it's a
I'm
pretty
not so sure it goes through.
It's a pretty low risk, high reward trade.
I think it's the opposite. I think it's to be short is low risk and high reward.
Yeah. That's what I'm saying. To be short is low risk, because worst case scenario, in all likelihood, you end up stock goes to 54.20 and you lose what $4 now. But unless like there is a microscopic chance that someone comes out of nowhere from another galaxy and says, nope, I'm buying Twitter too. So, but that's not going to happen, because if it was going to happen, it would have already happened by now.
I don't think it's going to happen. I mean,
yeah.
Look.
So worst case for you is you lose and you have to buy back at 54. But if it doesn't go through, then you're in the money.
Yeah, I mean, it's already starting to pay. I don't think there's going to be a white knight come along. No. I don't think. I mean, look, people who. What was the IPO on this? I think it was $45.
Elon is the white knight. There is no white knight from the white knight. He is the white knight. This is it.
This company is not worth $54. Anybody who owns this should get on their knees and thank their lucky stars that they're able to get out at this price, in my opinion. I mean, this stock was $10, right? When the shit hit the fan. I think if you've held this since the IPO for however many years that is, you made 5% or 6% on your money. I think the IPO was $45.
It's been, look, there is sometimes some marriages work, some marriages don't. The marriage between Twitter and Wall Street has never worked, and that's just the way it is.
Agreed. I agree.
And that's okay. The marriage is about to end, and that's fine. I don't think anyone's upset about it. Everyone's relieved at this point.
I wouldn't be shocked if and Elon's a very smart man, right? We all know that. He's just a genius. Agree with him, disagree with it. The guy's a smart man. It wouldn't shock me at some point if he does whatever he does to it, and then he comes back and makes it public again. That would not shock me.
I mean, yeah, who can say at this point? Wait, so so Tesla's getting smacked around. Twitter is down with the whole market. Here's a question from Regulated Freight Lines asking about Vertiv, VRT. Let's take a look at Vertiv here.
Yes, the spiders just made new lows, guys. We need to hold yesterday's lows at 418 and change. I'll tell you that right.
All right, Regulated Freight Lines is down bad, David, on VRT. He wants your thoughts.
Let's take a
on
peek.
VRT here.
So whenever anyone asks me about a stock, it's right to the daily chart, right?
Right.
All right. So let's see. Let me go weekly and see what the highs were. $26. All right. We got earnings tonight. Is that or tomorrow? We got earnings tomorrow.
Tomorrow morning.
Okay. Daily chart. All right. We're trading at what, 1150? So we got to get back above 13 for this to be constructive to the upside again. I mean, look at this, just a horrible downtrend in the weekly chart. Same thing. You'd have to get above 1338 for this to be constructive again. I don't know what price you're in or anything else, but it's just a horrible looking chart, daily and weekly.
And the bottom line,
break with the earnings tomorrow, right?
The bottom line is, I think the stock still looks expensive here. I'm gonna look in Benzinga Pro and
yeah, give me the PE and stuff like that. See what?
Yeah. So okay, the estimate for the earnings for tomorrow is a negative earnings per share, which wouldn't be so bad if they didn't have positive EPS last year, which they did. So EPS going in the wrong direction. You want to see earnings per share going higher, not lower. The estimate for their top line revenue, the street is expecting a $1.1 billion revenue number, which, if that's the case, would be down from each of the last 3 quarters. It would be up year over year, but barely. So what's the PE on this thing? 36. Price to sales is low. It's less than 1. EV to EBITDA is 14.6, which is not great. But I think it's still expensive. I don't know if this company has a forward PE, which is a red flag in and of itself, because the market doesn't want to deal with money losing companies right now.
They are getting destroyed.
It wants companies that make money, not companies that lose money.
Correct.
So let me dig a little deeper on this VRT for a second.
I'm up, just made new lows, guys and girls. So let's see if we get to that 418.80 level, if we get a bouncy bounce from there. Do I think Tesla's going to 800 today? No. I do not think Tesla's going to 800 today, but it just gave us a trade off the daily level. I don't know if anyone in the room got it, guys. Let me show you guys. 894 and change was the level, and it just bounced $2.50 from that. Let me show you guys this on the daily. Check it out. Look at that, guys. We were just talking about it, right? For a couple of minutes ago. We bounced 894.64 was the level. 894.64. 5-minute chart. And we got a little bit below it, and it just gave you almost a $3 trade from there. Now, I would never make that trade again if it goes back down to that level. That was your trade. You took a few dollars out of it, and that's a big daily level. If we break that, it's look out below. But isn't it amazing how the technicals work? Mike, you got hit at 895. Take profits, my friend. Go ahead, Aaron.
Just to put a bow on the Vertiv thing, I certainly, if you're down big, I certainly wouldn't buy more. Obviously, we don't know what the earnings are going to be tomorrow morning, and that could change everything here. I don't know how much pain you can take, right? Only you know that, and this is what happens when you buy individual stocks. Is this can happen, right? It's happening with me right now in SoFi. You have to know that this is part for this. This is possible, right? So it could absolutely keep going lower. It could fall below 10 on you. In fact, it's likely that it does fall below 10 at this point. I don't really know how much pain you're capable of taking or what your time horizon is, but it's okay to have a breaking point. It's okay to sell if you can't take it anymore. I definitely wouldn't buy more. I wouldn't add to your losers. But I guess I would try to remember why you bought it, right? If you bought this thing to make a quick buck, then you need to get out, right? If you bought this thing because you believe in the company long term, you believe in the sector, you believe that there are real fundamental drivers for their industry and for their business, then the all-time high was made in September, right? So we've only really been going down for what's that, 8 months? So You know, I get it. It's been a bad 8 months, right? It's been pretty brutal, but you can't let 8 months scare you out of a long-term thesis if that's what you really have. If you have a long-term thesis. But I don't know what you have. I don't know why you bought it, but I would try to think back to that. Is what I would say on the VRT. Someone asked if Tesla's going to go to 800 today. That would be ridiculous. Okay, if Tesla went to 800 today, that would just be insane. You're saying it's going to fall another $96? It's already down $100. Think it's going to fall 20% in one day?
Oh, it just gave a $4 bounce off our level for a trade.
Yeah.
895 to 899. No, I don't think it's. As a matter of fact, a couple of people in our room sold 720.
Yeah. I don't know if you guys talked about why. Like, I have a theory as to why Tesla's down.
I do too.
Yeah.
I have one.
I think. All right. What's your theory?
There are more sellers than buyers.
All right, that's good theory. My theory is that people are guessing that Elon's going to have to sell some Tesla stock to be able to afford this Twitter purchase. He's buying Twitter in a variety. He's got a variety of financing, right? He's got a margin loan, but he's got a $21 billion. There's a $21 billion portion of what he now owes Twitter. That it says he's gonna pay for it in equity. I don't really know what equity means. I'm not sure what $21 billion in equity of what. It was not clear to me in the press release. So
I thought he said at the beginning he's putting up his own money.
Right, but it's not like Elon Musk has $21 billion in cash lying around. So,
right, well, that's the fear that he's going to sell Tesla stock.
Right, exactly. He's got to sell some stock to get some liquidity so he can buy Twitter. Maybe that happens. Maybe it doesn't. Maybe Elon Musk is far richer than anyone knows. Right?
No, I think he even said he only had a certain amount in actual cash.
Well, I know. Yeah, he said it. Sure. You think I believe the things Elon,
there's also
Elon
there's this stipulation as well. So Musk has agreed to take out nearly $12.5 billion margin loan secured against the stock of Tesla. Were Tesla's stock to drop by 40%, he would have to repay that loan, a regulatory filing shows. So if Tesla's stock were to drop another 30% from here and that trigger kicks in and he has to pay that $12.5 billion loan and he doesn't have that?
Not 30% from here.
Yeah.
No, 30% of 900. Oh, okay. Okay, fine. Fair enough. All right, yeah.
So down to
700.
Okay, but so
550.
So that's the term of the margin loan. But I'm going to say this. You don't think that if push came to shove, these banks would bend over backwards to keep Elon's business?
Well, if every bank is taking loans against his equity in Tesla and the stock keeps going down, eventually they're all gonna have stipulations like this. If it gets to this price, you're gonna have to sell some to pay off this loan.
I'm guessing they would find a way to work it out.
We'll see.
Right? He's the richest man in the world. They would
I don't know after today if he still is. He's going to lose $20 billion of his net worth today.
Yeah, maybe. So, and also, you know what I think we should watch here going forward? Due to, in part to what Bree just said about the margin loan, it wouldn't shock me for a second if going forward, Tesla and Twitter trade with a correlation of 1. Tesla goes up, Twitter goes up.
Well, Twitter's not going to trade, is it?
Twitter's down today.
I'm saying once it goes private.
Yeah, once it goes private.
No. I'm saying until then, though. I'm saying until that day.
I don't know. I think Twitter will be all dependent on how the deal looks. And so I heard you guys talk about when I hopped off for a second.
Yeah, but Tesla could go up 500 points from here, and Twitter's not.
No, Twitter's not going to go. I understand that, but the little gyrations is what I was saying.
No, I don't think
all right,
so.
Fine.
I mean, you're entitled to your opinion. I just don't think that. I think so. And I heard you guys talking about the Twitter deal and how to maybe try to play it. So I actually, someone I got to find this tweet, but it was from someone who used to work in M&A in getting these deals done, and she was basically saying yesterday, Twitter trading at essentially like a 1% arbitration, like there was a 99% chance the market was trading that the deal was going to go through. She was saying was ridiculous. She was basically saying deals like this, even when it gets to this point, fall through all the time, especially when you're dealing with a guy like Elon in a company as big as Twitter. It makes it even harder. So she was basically saying yesterday that she thought it was trading too close to the buyout price, and now, of course, it's down 3%. So maybe this is a little bit more fair.
Yeah, that's fair. I will remind everyone that I own Activision for the same reason, right? There's a large gap with where Activision is trading and where Microsoft has agreed to buy the company. There's like a $20 gap, okay? So like, this is risk arb in a nutshell. I bought Activision for on the same logic, right? And DB in the chat is saying that Elon won't have a say in the matter, that the banks will go in and sell. I suppose. I mean, I've never gotten a margin call, so I don't exactly know how they work because it's never happened to me. Maybe David knows, but I don't. No,
it's never happened to me either.
All right, yeah, I don't know the.
That's not to say I haven't lost a lot of money at times, but I've never had a margin call.
No, I don't know the mechanics of that, right? So like.
Guys, you know what I like? I like a $7.50 put in Tesla for this week. I think you can get like $3 on it. That's what I like.
Okay. All right, David Green. We missed you last week, man. But we're back. We're back in the swing of things. Anything we didn't get to already that we wanted to cover?
Anyone who wants can come visit us for a week in a room. WallStreetGlobalTradingAcademy.com.
WSGT. David, did you have a good Passover?
I did. Thank you very much. It was lovely. How about Easter? How was that for you guys?
Easter was great. My Easter was great. Bree, you have a good Easter? No, he's not. All right. All right, he doesn't even know.
I was in. Wait, was Easter? I don't even know. I don't celebrate Easter.
It's 2 weekends ago. You were here.
I was here.
You're here. Yeah.
This too shall pass, guys. It might take a little while, but this too shall pass. God forbid you ever get some. First of all, I don't know how anything's ever going to go back to normal with Russia, but if we got some kind of, ceasefire or something over there, this market's a coiled spring. That's a 2,000-point rally if that ever happens.
Yeah, but we've been saying that for a month and 2 months now,
I know.
David.
I know. Listen, I still don't do anything besides what's put in front of me in technicals. As far as trading is concerned. So it's not like I'm getting long the market waiting for that to happen. You can't.
No. You will wait for a long time.
No question about it.
That's gonna be the case.
I mean,
all right. WSGT.com is David's site. David Green. Always a pleasure.
Always a pleasure, guys.
Speaking of margin calls, fun little tidbit. My grandpa was actually a margin clerk.
Okay.
On the floor, I think it was the American Stock Exchange, or maybe it was the New York Stock Exchange, one of the exchanges down there. And it was, I think it was a pretty low level job. His job was basically to go down to the floor and tap you on the shoulder when you were getting a margin call and say, "Yeah, you need to like get out of your trade right now, or we're gonna, or the guys upstairs want to see you."
So people did not want to see him.
The guys upstairs want to talk to you right now. This isn't good.
Yeah.
Yeah. I mean, I know he had many jobs, but that's one of them.
Can we pull up some charts real quick? I do see. I don't know if this is across tech. I'm seeing in Google at least we're getting a little. No,
yeah, it's all across everything.
No, I was saying in Google we're getting a little bounce.
Oh.
On like a.
Yeah, a little bit.
And Google reports tonight.
Yep. Yeah. So how's Microsoft doing? Same thing? Probably, right? Yeah. The whole market. Is the whole market just bouncing right here?
I don't know because I checked.
Yeah. Someone said something. Did someone say something?
No, I checked Tesla, and Tesla did, by the way, break that 895 level that DG was talking about. So.
Hiring wants to know what's wrong with Facebook. It's the whole market, man. It's the whole market. Oh, look at Facebook go. Look at Facebook go here. I doubt someone said anything. I know it wasn't the Fed because the Fed's in a quiet period right now. So
no, I think it might just be that. I mean, look, people are coming in to buy Google. It looks like people are coming in to buy Microsoft. Facebook, we just talked about.
We got some buyers coming in here.
Apple, but no buyers coming in for Tesla. Look at Tesla, just going straight down. Green DG pointed out that 895 level. Can we get a Tesla chart up real quick?
Sorry.
You're good. I just wanted to.
Tesla, TSLA. Wow. Hey, how's STLA, Stellantis? This is my theory that Fiat Chrysler changed their name to Stellantis so they could change their ticker to STLA so that people who have dyslexia would buy this stock instead of buying Tesla. Anyway, we looked at that chart for a while. And then how's the other one? TLSA. How's that one doing? Remember this one?
Nah.
Yeah, this one has done some crazy things. TLSA. People searching for Tesla bought the wrong stock. I don't know. All right. Anyway, back to Tesla. Wow, this is a little bit remarkable. When's the last time Tesla had a day this bad? I'm gonna go ahead and venture it was November 9th.
What was that drop?
Well, the stock opened at 1173 and got down to 1011. It fell $160 on that day.
We're down about 103 right now. I mean, yeah. 10% for a company this big is a lot. I mean, to put it into perspective, when Facebook gave that terrible earnings report a few quarters ago, and it became the single most market cap lost in a day ever, it was like 230 billion. We're already at over 100 billion for Tesla today. So about a little less than half of that terrible Facebook day we're just seeing on a day where not even on an earnings report or anything. I don't know. Again, it's all speculation, but we can assume it has something to do with the Twitter deal. There's some other news coming out.
Yeah. So you know what that means is this is either like there's a great how likely is this that this is just a massive buying opportunity in Tesla? Because it's not related to the company at all. It is not down on any company fundamentals.
I don't know. I mean, you could make the argument it's a buying opportunity for sure. There's probably a lot of other people that would make the argument that even if Tesla stock dropped another 10% down to 800, it'd still be overvalued. So I don't know. I mean, I think we'll be able to tell in time where the market will price Tesla at. But right now, I
understand the fear of Elon having to sell some Tesla. We don't know if he's going to have to, but if he is, that's worth something. That's definitely worth a few bucks, a few percentage points. I mean, is it worth 10% though?
But even all that aside, aren't there are thousands of people out there that are short Tesla or think that Tesla is just tremendously overvalued, and institutional investors included. There are people that will not buy for their clients Tesla because they say it's too overvalued. It doesn't trade based on its fundamentals. So,
well, I mean, yeah, Tesla's its own beast. We know that. Pretty remarkable day though. And then somebody mentioned Rivian. I saw speaking of other EV stocks, I saw that Henrik Fisker, he left Twitter. He's out.
I guess he doesn't like Elon Musk.
I guess they hate each other. Anyway, the other EV stocks are all, the whole market's down today, so everything is down. So any growth stock is going to be down. EV stock, tech stock, all of tech is down. You look at what's up, and it's like, it's energy, it's utilities, and it's like a couple random stocks here and there, right? Like Pfizer. Oh, how's Whirlpool? Is Whirlpool still up?
Why is Whirlpool
I can't
up?
believe this. It is. I can't believe this. So they had earnings.
Okay.
They basically said the same exact thing that Netflix said, which is that our growth is slowing. We had all this growth due to COVID. It is now, the growth is gone now. They lowered their guidance. They're paying more for goods. They're dealing with serious inflation on their end, and no one's buying new appliances anymore. And it was a bad report, and the stock is up 4.69% today. Because they're not a tech stock, because they got a low PE and they did a freaking buyback. Whoop-de-doo.
Speaking of low PE,
Can we not get married to this high PE, low PE thing? Some stocks have a low PE for a reason. All right, those are called value traps. Those are called Jay. I get it. It's a PE of 4 or something, 7.5 low on the forward PE. Cool.
I'm getting really interested in making a substantial position in JP Morgan right now.
You want to buy a bank?
Hey,
if you're gonna buy a bank, you might as well buy the largest bank, right?
Exactly. And just speaking of PE, looking at it, JP's officially fell below 10. It's got a decent dividend of about, I think, a dividend yield of around 3. And so the way I see it is if I get, let me see what JP's trading at right now, 120, 122 about, 124 about. So if I get 10% from 124, to 138 plus the 3% dividend, 13%, I think that's great in this environment.
Wait, I don't know. I know where you got 10%. You just pulled it out of your ass.
Well, I'm saying, like, if I'm targeting this on a swing trade.
Oh,
like,
but why is it going to go up to $140?
Of course, it doesn't have to.
Okay,
it's a stock; it can go up or down.
Yeah.
But if I'm going long on a swing trade, I'm hoping the stock goes up.
Yeah. All right.
So that would be my price target, is 10% on the upside.
I don't know. It's in a downtrend. So
I mean, so is everything. So
yeah, it's true. That's true. Not everything.
Well, I mean,
not everything.
Oil and gas. I mean, I'm not going to go out and buy Chevron right here. It's already been up 30% over the last 3 months. Like, it's
okay. So you can't buy the stocks that are making new highs, and you can't buy the stocks that are in downtrends.
Well, I mean, there are some stocks.
So where does that leave us here?
There are some stocks that.
How's Pepsi doing? Pepsi's still up today.
That have been really strong. That I have been interested in making.
Ooh, how about I know you're a little bit ways away here, but how about Pepsi to buy it? Is that going to be? Would that be an all-time high? Yeah, it would be, right? So Pepsi above, what's that? Like 175? What's the all-time high? 177 is your all-time high in Pepsi. If we can get to 177 all-time highs, let's go. Anyway, back to JP Morgan. So you want to buy it?
I do. I mean, I excuse me, I haven't yet, but I've been seriously considering this position.
That's not what he was saying, Andy. He's not gonna buy 10% of JP Morgan. That would be impressive, though, if you could do that.
I did see. So what was it? So with Twitter, it's like the top 2,000 shareholders or something are going to get to, like, remain board members or something. Like,
no, there's the federal law is that I guess with a couple of exceptions, private companies can't have more than, I think it is 2,000 shareholders. So
yeah, so the top,
if you're a big whale in Twitter and you want to keep your Twitter shares and you own like if you own 110 million shares, whatever, you maybe can do that.
Yeah, so basically people on Twitter were talking about how many shares of Twitter would you need to hold to get into this top 2,000.
Yeah.
And someone did the math, and obviously it's too much money for any of us, but it's actually, like, not like if
should we pool our money together, you think?
Someone was suggesting that too, making a DAO to become one of these Twitter shareholders, but I think they said to be around like 5 million.
5 million shares or $5 million?
Dollars. $5 million worth.
That's not that much.
That's what I'm saying. To get you into the top 2,000 shareholders.
Oh, that's not that much.
I know.
All right. Sell some or buy some super cheap out of the money calls right now.
We'll see if we can get 5 mil.
And I will do some leverage ETFs, and we can get some money going here. Are we still bouncing, or was that just a short-lived thing? Because I've been wrong once today already on the bounce. Let's see. No, we're still bouncing, Aaron.
Really?
Yeah. Look at the SPY here.
Hell yeah.
Where's my earnings calendar for tonight? There it is. Let me bring it up on the screen. Oh, I keep forgetting to update.
All right, I'm trading Google's earnings tonight through spreads. Google's too expensive for me of a stock to just buy straight up calls or puts.
Not for long.
So I'm calling I'm buying debit call spreads. So essentially, if Google goes up, I'm in the green. If it doesn't, I'm not.
Here's the calendar for tonight, or for the week. I did miss, apparently unacceptable, but I missed Robinhood on Thursday after the close, so apologies there. But tonight you can see there Alphabet, Microsoft, GM, Capital One, Visa, Chipotle, Mondelez, to name a few. That's not all of them. These are just the biggest ones, the ones that I thought were important. So tomorrow morning, Boeing, GlaxoSmithKline, can't say that. Humana, Kraft Heinz, Spotify. By the way, Spotify launched a Spaces competitor. Did you know that? Spotify Live?
I did not know that.
Yeah. Just stream on Spotify Live.
I mean, there's been like a bunch of people that have tried this, right? You had Clubhouse. I know Clubhouse had like one different competitor. I forget what it was called. And then Twitter obviously brought in Spaces.
Yeah, credit to Twitter. They killed Clubhouse. Twitter killed Clubhouse.
Oh, now it's bothering me. There was one Clubhouse adjacent app that wasn't Clubhouse, but wasn't anything else. Now I can't remember what it was.
Crypto thinks this is a generational buying opportunity in Tesla. Well, Kathy Wood certainly thinks so.
Yeah, I mean, Kathy Wood's model that they just put out on Tesla, the bull case says that by the end of this year we'll have robo-taxis.
Yeah, that was nuts. Oh, man.
I mean, wouldn't you think like to have robo-taxis, you'd first have to have like full self-driving? Oh, by the way, yesterday in the parking lot, I was getting into my car and there was a Tesla parked right next to me.
Yep.
And all of a sudden, I don't know, like maybe there's a Tesla owner out there watching that can explain this to me, or I don't really know what happened. But from what I could tell, this is what happened, is that when I walked over to get into my car and was like in between my car and the Tesla.
It spoke to you?
No, but it's like its lights turned on. And I even said, like, I swear to God, if you start like driving right now, because like, you know how some people can do that. They can like call their Tesla from the parking lot while they're waiting and the car will come pick them up.
All right, this is some Batman shit.
So I was worried it was going to start driving. And then, you know, like the big monitor inside the Tesla.
Yeah, the screen. Yeah.
It was just like flashing saying recording. So I don't know if it was some sort of like security system that sensed like when I got around it, it started just like record. I don't know. Okay, Aaron Thomas is shaking his head, so he's saying, yeah, that's what happened. So that's what it seemed like happened, which I was actually like, all right, that's pretty cool, because that probably would deter someone from breaking into your car if as soon as you got close to it, it's blinking and saying recording, all that stuff. I thought that was actually pretty cool.
I would say I've never felt stupider than when I drove a buddy's Tesla and couldn't figure out how to get out of the car, like how to open the door.
Yeah.
Never felt dumber. Yeah. I was trapped in the car. How do I get out of here?
That happens, man.
Yeah.
Think about the people that get trapped in it, and then it
just put the handle where I'm used to the handle being. I don't understand why it's got to be some complicated thing.
All right, so yeah, I mean this is significant little bounce here. The Qs were down 3.15% at noon. It's now 12:26, and now we're only down about 2.5%. So more than a 0.5% bounce. I mean, it's not. I'm not saying everything's
all right. Everyone start buying.
I'm not saying it's all butterflies and rainbows out there, but at least it's something. I don't know.
All right, should we buy the Qs? Are we ripping here?
I'm deep into Google earnings.
All right,
tonight.
Deep in earnings. All right, let me do this.
And then I do have some TQQQ calls just in case. We do get like a bigger bounce. So we'll see, man. I mean, you know what's really not having a good day?
No.
ARKK.
Well, it's Tesla, man.
Yeah, but it's other things in ARKK as well, right?
I think it's mostly Tesla.
Roku down 7.5%.
Yeah, but here, there's a website that I'm gonna free plug for this website. Somebody reached out to us a few months ago, and he put together this tool. It's called Kathy's Arc, and I'm gonna post the link in the chat right now. There it is, and I'm just gonna look up and see. So across the Arc family of funds, Tesla accounts for almost 7% across the board. For ARKK specifically, Tesla is almost 10%.
Wait, hold on. Where are you at?
I went to combined. Scroll up.
Scroll up.
Yeah, combined.
Combined.
Yep.
Okay. So
here, I'll share my screen. Hold on. We're not looking at that.
But see, okay, look, yeah, Tesla is 7% of all of her funds, but then Teladoc is 5.72, so it's like a little more than 1% less.
Right.
Oh, Teladoc's not having a terrible day, but
Right.
I was saying Roku is. But I was just saying Arc, like all the growthy tech, right? Your Asanas, your Rokus, not having a good day.
Right, but this is driven by Tesla, pun intended.
Driven by Tesla.
like the drop in ARC is driven by Tesla.
Yeah.
Today. Yeah.
But do you think that's dragging down those other holdings then as well?
It's possible.
All right.
Man, what a...
I guarantee you there are a bunch of kind of old school traders out there that like to trade SPY and Qs that never really wanted Tesla in there in the first place, and now it's in there and they're like, see, this is why we shouldn't have had Tesla in the S&P.
Well, people are guessing that the only reason that Google is doing the stock split is so they can get into the Dow Jones. I mean, because the Dow is a price index.
Yeah, it's just
index,
the 30.
Right.
Wait, what is it?
It's the 30 largest like non-tech companies, but now there's tech in there, so I don't.
Right, like
Microsoft
and Apple
the S&P has a freaking Dow committee that they just, I don't know. It's a mysterious thing. Wait, what was I about to look up? Oh, someone just asked us about SUM, right?
Yeah, IBM and Intel are both in the Dow, as well as Apple, Microsoft.
All right, what does SUM do? Blind trader. Is it a materials company? Because that's what's in the name.
Do you know the biggest weighting in the Dow?
Biggest weighting in the Dow?
Yep.
Berkshire Hathaway?
Nope.
Am I close?
I don't even think Berkshire Hathaway is in the Dow. It's not.
It's not in the Dow, really?
No.
All right, it's a price weighted index.
Well, I don't know. I'm looking as of February 9th, 2020. I'm on Wikipedia, the like gold standard of data. So,
we get all our market data from Wikipedia.
That's not true.
All right. What is the largest weighting in the Dow? I'm not looking at the chat. This is a fun trivia question.
I'm gonna see if I can find like a more updated list. This is from Slick Charts, probably a little bit more.
No. Now, is it like Travelers Group or is TripAdvisor? No,
dude, you're not even. I don't think you're naming Dow companies or Travelers is in there. Sorry, but it's not Travelers.
I'm not looking at the chat. I'm ignoring it. This is the largest weighting in the Dow. I'm trying to think of a high price stocks because it's a price index, price weight index. I'm not just telling me, man.
Tell you?
Yeah.
United Healthcare, UNH.
Oh.
9.17%. But then the second biggest is Goldman Sachs.
UNH, $500 stock. Yeah. Yeah.
All right. Fun trivia question.
All right. But the question we were asked was about Summit, SUM, Summit Materials. So what is this? What is this? DB, I'm sorry, man. I wasn't looking at you. He's yelling at me with the answer. What does Summit Materials do? Construction play. Whoa. Would have been good to own. This would have been a great buy a year ago.
Some construction?
Yeah. I don't know about now. Well, okay. So this looks like pretty identical to like home builders, doesn't it?
What's the expected move in Google?
Here, we'll look after this. So I guess my take on Summit is the same as my take on the home builders, which is just like, we need more, but right now, no one is incentivized to build more homes because prices to build them are skyrocketing, and there's insane demand. There's such a tight supply of homes that it's a seller's market right now. and I can't see that changing anytime soon. The home builders don't want a repeat of 08, 09 when they got left holding the bag on all these homes for sale, right? So I can't see the fundamentals of the housing market changing anytime soon. Construction is slowing, it would seem, with rising costs. So I don't know if I'd be bullish here short term on any construction, any home builders, any construction, at all. Frankly, that's my like super high level, not very. Yeah, thank you. Brian agrees with me. Brian Blockchain. Good. That means I'm right. I have one person that agrees with me, therefore I am correct. What was your question just now?
I wanted to know the expected move in
on Google.
I'm gonna guess it's
so you can the way to calculate expected move is very easy. You just go to your options platform wherever you are, and you go to the weekly options for that week. You go to the closest at the money put, at the money call. You add the bids together, and that's more or less your expected move. So, or you can just go to a site that does the math for you, which is what I would do when I don't have my options platform open, which I don't have right now. So expected move on Google. Pretty sure I looked this up yesterday, but I
guess like 5%.
It's 7.5%.
Wow.
Yeah.
Okay.
So that's how much is that on dollar wise?
Well, 10% would be 240, so probably around $200, 190 maybe.
10% is 240 and 5% is 120, and it's halfway.
I said around like 190.
And it's halfway.
180 ish.
Yeah, halfway between 120 and 240. So yeah, 180.
All right, guys, let us know in the chat if you've got any tickers, any stocks you're watching, any trades setting up. I've given you guys mine. I'm playing Google on some call debit spreads tonight.
Should I sell my Altria? It's quiet. It's not like it's not doing anything. It's up for me, but I'm up like I think I'm up like 4%.
I mean, it's in an uptrend. The chart looks good. I think if you're holding Altria, you are basically saying if
I think I want to sell.
If the rest of the market like isn't doing well, this will probably do better than the rest of the market in a bear market. If the markets turn around and the markets are doing well, this will be an underperformer.
But this is in my YOLO account, and I'm up 3.6% after like 3 weeks.
Okay,
like I'm losing money with inflation in this economy. That's my point.
By the way, when's our next? When do we get like important econ data coming out next?
When is inflation? What is it? It's the 13th, right, guys? I think it's 5/13, which is no. The 13th is a Thursday. I think it's like 5/11. It's May 11th or May 12th, somewhere in that second week of May is CPI. So do you want to fact check me on that? You know what? Here, I know where to find it. I'll check right now because I have it in my calendar. CPI is May. What? Why is it not showing up on my calendar? That's weird. It's not showing up. Okay, I don't know when CPI is. I'm pretty sure it's middle of May.
Yeah, Patrick. So I've been out of Baba for a while. I've kind of been fearful of everything going on in China with COVID right now. So I'm gonna wait till that kind of passes, and then we'll have more of a understanding at what's going on from a global macro perspective in the economy. And I still think, from a long-term perspective, Baba is undervalued here. Now, does that mean that I think Baba is gonna go up in the short term? Maybe not, but 10 years from now, am I willing to say that I bet that Baba's above $85? Yeah, of course. So I still have a long-term position. I think I just have a few shares, like literally 3 shares in my Roth IRA, so it's like less than $300 worth. But I was swing trading this earlier. Now I haven't really been trading it as much, so I'll let you guys know if I do decide to start a new position in Baba or even go short or something like that. But for right now, I've just been kind of hanging on the sidelines with that one. I really don't have a more a favorite stock right now outside of Google. I think Google right now is as close as you can get to kind of a no-brainer as a trade. But we'll know more after tonight. I could be sitting here tomorrow and we're down 20% on Google like we were on Facebook and Netflix. That's completely plausible. But I just think Google with where some of the more quote unquote value names are being traded right now in terms of their market cap compared to their earnings and how much money they're bringing in compared to Google's, there's a big disconnect there.
I just sold my Altria, by the way.
Okay.
Yeah, that was.
And I'm willing to bet on like what we've seen over the past 10, 20 years. Like I know times are a little different right now, but like I don't know how anyone could have been paying attention to the markets and business and finance in general over the past 10 years and sit here and say that like betting against Google is a smart thing to do here. I mean, I went over it yesterday. Some of the names that Google actually has a lower PE than, and when you're talking about Google having a lower PE than Coca-Cola, than Costco, some of these other names, it's like at the end of the day, risk is involved in any stock you buy. Would you rather be taking on some risk to see Google grow more or Coca-Cola or Costco? So, again, that's kind of my biggest, my highest conviction position right now is long Google at these prices. And that's both for a kind of swing trade and a long-term trade, long-term investment. But this environment is...
Thank you. CPI on the 11th, May 11th. Hertz just brought from Twitter. Wait, Twitter got below 50 now?
Dude, yeah.
Dude, should I just buy this?
I'm telling you.
Should I just buy this?
The market, Mr. Market doesn't think the deal's going through.
No, I don't know if that's it. Because there's no reason why Twitter should trade at 51 yesterday at 3:45 p.m. and then what? All of a sudden today, the risk arbs have decided that they were wrong yesterday. That's not how it works.
I think it could be anything. It could be because Tesla's down so much today.
Well, that's what I think in my
maybe people are thinking, oh, if then Elon sees.
Right, I'm buying some Twitter. I know the risk reward is probably not there.
We'll use this to transition to Tesla. But what I think, and this is all speculation, is if people are seeing Tesla down 10%, then they're going to start thinking, what if Elon sees Tesla down % and thinks, oh, if people see this as bearish for Tesla, maybe I, don't want to go through, whatever. Bottom line is because we're trading so far away from that $54 buyout price, the market's pricing in that this ain't a sure thing. If it was sure thing or 99.9% thing, as close as you can get to it, it'd be trading a lot closer to that $54.
All right, I'm throwing out nope. I almost got cute with it, but decided don't get cute. Don't get cute with your limit orders, everyone.
The other, Spencer learned that lesson on coal.
I've learned my lesson many times, and I still don't learn it.
The other interesting thing, I think, I'm not saying like obviously Elon's a super smart guy. I'm not saying he hasn't thought some of this through, but I've been seeing this. Some lawyers that work in this space kind of talk about this. Is basically they're like, look, we're all for, no censorship, freedom of speech, whatever. But if Elon goes through with kind of a no moderation, everything goes type policy on Twitter, he could be setting Twitter and himself up for a lot of lawsuits. I mean, think about it. Like if someone was getting harassed on Twitter and Twitter is saying, oh, we're taking a completely hands-off free speech approach, harassment speech is allowed, and then the person getting harassed, something happened, they whatever, and that family tries to sue, then they have more of a case than if Twitter is saying, oh yeah, we're taking steps to kind of limit that on our platform. So basically just saying that kind of a byproduct of going fully free speech would be then allowing himself to opening the door up to some financial liability.
All right, I just went full YOLO in the Webull account, bought myself some Twitter shares. I love how this morning I said that buying this was pointless because the risk reward ain't there. The risk reward really hasn't changed that much. It's got a little bit better, but not by a lot.
I think if anything, the risk has got me. I'm seeing this headline right here. As Musk prepares to take Twitter, EU reminds him we have rules. Musk's pitch for free speech may turn Twitter advertisers jittery. And that's what I'm talking about. It's the same thing. If harassment and hate speech is all of a sudden allowed on Twitter because it's protected under Elon's views of free speech, you might have advertisers say, oh, I don't want to, be on a platform that's shared with the KKK. That's completely plausible. And I support, I think less regulation, more in speech is better. I think Facebook, Google, YouTube, Twitter have all kind of
we've done this.
Have kind of taken things off that I don't agree with them taking off in the past year. But some of the speech that they take off is they're just protecting their bottom line as private companies at the end of the day, or some of them public companies.
Why did I just buy this company? Whatever. Either I'll make $5 or I'll lose half my money in an instant.
What? How many shares did you buy? Or do you not want to?
A whopping 10 shares.
Whopping 10 shares.
A whopping 10 shares.
So your upside
I just bought 10 shares of Twitter. So I'm going to make 50,
your upside is $50.
I'm making $50 or I'm losing $250.
You think Twitter goes down to if the deal falls through, Twitter is down to $25 a share?
Yeah, I think it's reasonable.
Let's see. Was that around 33? Yeah, sure.
Yeah. All right. Let's see what Robert Roy has to say about this. TradingLikeABoss.com.
I also think there is a chance that
this may be the dumbest thing I've ever done. Wait, what was that comment? Yeah. All right. Here we go. Let's check Robert Roy. All right, Robert Roy.
Hey guys, how we doing?
What's up? Would you buy Twitter here, thinking that it's a done deal?
I think Twitter is a diagonal spread, not a long position, knowing what the top end is. There's not enough profit in there. God forbid they do pull the plug.
Damn.
The downside is pretty big.
Damn. Diagonal spreads.
Diagonal spread.
If I did option spreads, yes, that would be sounds like a good idea. Alas, I have the problem is my YOLO account is not big enough for options right now yet.
Okay.
I have to YOLO a few more YOLOs to get there.
Rob, I'm going big into option spreads tonight on Google.
Are you now?
I am.
What are you doing?
I'm doing some call debit spreads. I have a few different ones, some a little bit that are higher price, riskier, that were say $100 a contract that will be worth $350 if they're in the money. I think it's if Google goes above 6.5% its price right now. But then I have some lower ones that are more just double my money as long as Google opens higher tomorrow than it is today.
Okay. Well, there you go.
So Google, and the reason I like doing those spreads when a stock, if I'm doing it with a stock like Google, Amazon, where it's just too expensive to buy the outright calls, I can kind of offset some of those expensive contracts by doing the debit spreads.
Exactly. It definitely puts things in your favor as far as cost goes, and that's the great thing about options. There's so many different ways to trade it. I mean, there are butterflies, iron butterflies. There's so many different advanced trades that you could do. Not ones that we suggest the average person does. I think for most people, just a buying call, buying put is sufficient. But as you get more proficient at it, things like spreads, which put the odds in your favor. This morning we did in our practice, setup this morning, we did GE and 3M, right? they both had news come out on them, both had earnings come out on them, both went down. Well, downside, how do you play it? If you're trading the stock, you need to short the stock. There's inherent risk there. If it goes against you, it's unlimited risk with a limited downside upside potential. When we do a credit spread versus an option, you are taking advantage of overvalued premiums. The market maker jacks those premiums up in the morning, and everything just deflates as the day goes on. And you could see it within the first 10 or 15 minutes in most cases go down. Doesn't mean there's not profits to be made in directional trades, but if you're taking a news item and trading it with some form of spread, it gives you a better chance of being right in the trade. You get less profit potential, but I got a higher chance of being right. So I'll take that all day long.
Yeah, and I mean, with something like Google, it's like if I do one of the spreads where it's all I need to do is get in the money is for Google to be up 1.5%, like it's pretty binary at that point, right? Google is either going to be trading. I doubt Google's trading within 1% of its close today, right after it reports earnings tonight. It's either going to be, a few percent down or a few percent up. It can't. Typically, Google's not going to be right where it is. It's not going to stay flat after earnings, essentially.
Correct. It's just a matter of how overvalued the options may or may not be. That's all.
Yeah. Speaking of, I mean, do you want to pull up maybe the chart for Google and the options chain, see if you see anything that you like?
Yep. So when we look at Google, I trade the L. So overall bearish hit, right? So far down today, another $68. When we look at our fibs, let me take the symbol grid down for now. We look at Fibonacci's, we violated through this negative 136 level. So was there an intraday opportunity there off of that 26.73 level down? Potentially, yes. I didn't take one on it today, right? What I will be looking at is, because they are part of the NASDAQ, and guys, this is an awesome trade if you're willing to spend a little time to learn it. Because they are part of the NASDAQ, if we look at the NQ, right? The stock's going to announce after the market closes. The NQ trades until 5 o'clock, basically, right? So, which is the NASDAQ futures. And these are E-minis. You can trade the NQ based on the Google move. Right. So there's a great opportunity we do it for about a dozen different stocks: Amazon, Apple, Google, Tesla, companies like that. Big movers, and only on ones that announce after the market, not ones that announce pre or during the market hours.
So you're basically just saying, because there may be some extra premium baked into these Google option contracts, that trading the NQ futures is a way to kind of bypass that extra premium?
It does bypass the extra premium, the extra cost, the extra volatility that's in there. But the vols could be just as wicked in a position like this. You could have a whip up and down. So what I'm going to do is, based on whenever Google makes that announcement, if it's at 405 or 435, I'm going to look at that time, and I'm going to be looking at the NQ at the same time. I have a screen with multiple charts open on it, 1 minute, 5 minute, and so forth, daily. And I'm watching for what's going on in that very short-term 1 minute or tick chart. And if we start to get the climb, and especially if we're near any kind of major support level, then I'm going to go ahead and I'm going to buy the position. If we start to drop, I'm going to go ahead and sell the position. And you pick up decent premium on each tick that it moves. And all futures are slightly different. You've got the Dow, the NASDAQ, the S&P, the RUT. They're all slightly different on how they pay out. Right. But the NQ, we only do it on NASDAQ stocks, and it is a way to offset the volatility. I'll look at Google tomorrow around pivot points and look for either A, a continuation if it wasn't too big of a move up or down, or B, a reversal if it was too large of an overall move, barring news, right? Like a Netflix. Their news was so bad. I'm not fighting that news. It was just no way I was going to try to go against that. It was just too devastating for them to announce 200,000 subscribers and possibly 2 million more this quarter. Is just too big of a number for me to play with. But if the news comes out and says, yeah, we hit our numbers, but not as good as we wanted, but we see next quarter is going to be better, then, okay, we can get some recovery on that. But if it's, oh, God, the world's coming to an end, I'm not going to fight it.
Got it. That makes sense. Any other tickers you've been kind of watching right now?
Yeah, there's a bunch. I mean, Twitter, I heard you guys talking about it while I was waiting to come in. Literally on Twitter, trading that diagonal spread that we talked about. Do we have a date for the buyout on Twitter? I haven't had a chance to look yet. Do you know what that is?
No, I have. I haven't seen a date for the Twitter buyout yet.
Yeah, I'm looking for the close of the deal, but
it's end of the year sometime. We don't know. We don't know when.
I think it's just,
that's good.
Okay.
That's really good. So I'm going out to at least 120 days. So I'm going to look out in September. I'm going to go find an option with a 65 to 85 delta. Look at that, boy. Somebody's been active on this today. Look at this, 634 contracts on this $45 call, right? I could buy that option for 673 right now. We'll call it 675. I don't really want to have to do math. So the $45 call is at 675, right? So and I'm just going to load this up as a simulated setup here. So we're going to go ahead and say, yes, we want to buy this option. So it'll load down here. Okay. Then we're going to come back up to the top and we're going to go front week and we're going to find a delta that's about 40 or lower. I really don't want to go higher. So I've got the 50.5 is trading at 36 cents. So I'm going to go ahead and I'm going to sell that position. And let's just change this over to one contract. Okay. So the natural, as it's trading right now, would cost me $6.50. If I negotiate with the mid price between bid and ask on both legs, it's at $6.37. Okay. So again, call it 635 to make math real simple. Well, I have the right to buy the stock at 45. And I have the obligation to deliver the stock at 50.5. So that's $5.50. If I'm spending, call it 6.5. If I'm spending $6.50 to do this trade today, what's the likelihood that Twitter is going to get to 50.5 by Friday? I mean, I get it. There's a 34 delta, which is a 34% chance of there being intrinsic value, but I don't see this getting to 50.5 unless Elon's raising his bid. Right? So that option's going to expire worthless. Then what? I go do next week. I already own the long. I go do next week and I'll take in 50 cents. Right? Right now it's at 60 cents. And
yeah, I don't know why Elon would raise his bid because the board already unanimously approved it. So
exactly.
why would
it's not going to happen. Mark this down, guys. When you have a buyout opportunity, as long as there's enough time, a diagonal spread on weekly options is the way to go, assuming you've got enough open interest, you've got strikes that have the right delta. Is assuming that works, then that is a great trade setup to do. Right? So this is how I'll be looking at Twitter later. I'm just waiting for a date. I'm waiting for that to find out approximately. I don't need an exactly December 3rd. I just want to know it's not July, right, that this is taking place. Just might be a little too close for me. So Twitter is one of them, Aaron, that I think there's just good opportunity on it for that type of trade. Again, this is using a specialized tool in your tool belt, right? It's not just going out and saying, I'm going to buy the stock and hope that it goes up. So many traders, I find it in the traders at Wealth Builders HQ with us and everywhere, they're trying to get that home run. They want that big one. They want to be able to turn around to their friends and say, you know what? I made 20 grand on this stock or on this option. And that's great. But I would rather get in the trade and get out of the trade, make $800, $200, $1,200, $4,000. Ooh, nice one. $600. I lost 200. I lost 400, right? I lost 700. Oh, I made 3,000, right? I'd rather have that because if you're swinging for the fence, I don't know if I want to tell people this, but I'm a Met fan. I don't really follow baseball that much any longer, but as a Met fan, I remember Dave Kingman as a kid, right? He was the home run king. He was also the strikeout king, right? He swung for the fence. He had the most home runs on the Mets, but he had the most strikeouts too, right? The guy and he was batting 260 or whatever it was. The guy that gets on base over the Mookie Wilsons of the world, they get on base over and over again and they're batting 320, 330, right? I'd rather be the 320 batter than be the 220 batter and say, look at the home run I just hit. I want to get on base a lot of times in my trades. So there's great opportunity. Find the right strategy for the position that you have. If you're a mechanic or someone that works with tools, you know that you don't take a hammer out to open up a nut, right? You get the right wrench to open that up. Same thing here. Take the right options trading strategy.
Yeah. By the way, speaking of the Mets, I was watching the Mets Cardinals game last night. The Mets came back in the 9th inning. It was not a fun game for me, but the
My
Mets
earliest
won.
memory of the New York Mets was with my grandmother, and when I was 5 years old, sitting in her bedroom on a small black and white, 12-inch black and white TV, watching the World Series.
Wow.
Great memory of my grandma, and she was the one that really pushed me into. When I say pushed me, she's the one that got me interested in baseball and the Mets. Grandma was hardcore, man. I'll tell you.
I wonder if there's a correlation to like kids who are into baseball and the numbers and stuff, that maybe a higher percentage of them then get into the stock market.
Maybe. I mean, it certainly wasn't from my education. I wasn't a smart brainiac. I wasn't a math guy. Still am not. I've been sitting here for half an hour. I finally called my cousin, who's an engineer, and said, how do I figure this out? I'm trying to figure out volume of a bucket in cubic inches. And he's like, oh, just do this. Okay. I'm not a math guy. I don't know that stuff. When it comes to the market and looking at a chart, I got a pretty good feel for what I see on a chart over and over again. So let me share some other ones with you, Aaron, if you're good.
Yeah, we got time.
Okay. So ABT, right? ABT.
Abbott
Labs, right?
Okay.
So let's see. Let's get it where it's all on the screen. Let me unscrunch. Okay. So I'm going to go very slowly on this one. I'll pick speed up a little bit after, right? We have a V-top in here on our fib. This is where the fib started. We get a nice move down, sideways move. Strong, what I call a bearish thrusting pattern right inside of here. And we get a beautiful V bounce, and it gives us this upside down H looking pattern. Let me see if I can't move some stuff around here. Bear with me a second. I need a drawing tool. StreamYard needs to put drawing tools inside of there. Give me a second and I'll grab one. Where did it open? Aha. I'm going to start this up just to get a drawing tool going. But that V bottom that's in there came up here into this 50 percentile range. So right up in here, so half of the overall move, and it failed. And basically what we wind up with there is this H pattern, right? Just an amazing setup. We got a 1, 2, 3, even 4. 4 standard deviation move. I'm only looking for 2-line move. We got a 4-line move out of this. And then we broke this 0 then, which is where the fibs ended before that bounce. We broke it. We went about halfway through these 2 fibs in here, and then we bounced. We came back again. We came back again, and we failed. We pushed up, and we failed. We did it again. We failed. See how we keep coming back to this line? Now, recently, this one did not make it down, nor did this one. This one made it down to that center line, that 115.79. So all of that setup in there to say, okay, this is what I see happening. Right now, yesterday we closed up here. Today we opened up here and we stretched higher above that 119 fib level, that 0 line. And when we broke down, retest and fail, there's the entry into the trade, right? And your very first targets, you have 2 targets on this trade setup. The first one is going to be just above that 115.79. So maybe 115, 115 and a quarter, whatever fits your risk profile. But right around there is we're going to set up the target. We're going to sell half of the trade at that point. Okay. All right. Are we good so far? Oh, Spencer, you're back.
I'm with you. I'm here. Yep.
You're good. You're good, Spencer. You following along?
Oh yeah. I'm following along.
We sell the first half there. The second target. So that's T1. That's target 1. Target 2 is down here. And that's at 112.58. Okay. And again, we're going to be up above there. So probably 113, 113 quarter, somewhere around there. We're going to be up above this line, just as we are here, above that 115.79. So again, 116 quarter, half, somewhere around there. All right. And we're going to sell the second half of the trade at that point. I can tell you right now, this is a base hit trade. It is not a home run trade. The goal here is if I'm in the right position, I get the right move, we're going to pick up a couple $100 on the contract at best. We're not making $2,000, $5,000 on this trade. And in probably somewhere between 60 to 75%, market conditions make some difference in there. But somewhere between 60 and 75% of the time, we're going to get the first exit, and then we're going to get stopped out. So we're only going to take our first half, and then we're going to get taken out of the second half of the trade, right? So this setup is called a zero line breakout. Hence this zero line. We broke out, retested, and failed. And this was one that set up for today, right? And I've got others that we've looked at for today. I've got others that we're looking at for tomorrow. This is an everyday setup that I look at on a regular basis. I talked about these a while ago here, haven't brought them back up. We're seeing a lot of success with them right now from our students, so I figured it's probably a good time to introduce or reintroduce that back in again. All right. Does the setup all make sense, Spencer?
Yeah. No, that was a very simple trade to follow.
Okay, good. So should I look at another?
Yeah, let's keep going. This is good. I like this.
IBB is another one.
Oh boy.
Look at the setup. I mean, I can't ask for any better than what I've got right here. Right? We closed up here. We opened right here, stretched a little bit higher, and then we failed. The key is, did it fail and just drop? If it does, it's a more aggressive entry, not one that I like. I prefer that it went down a little bit. You've heard me talk about this before, Spencer. Retest and fail. That, to me, is my best entry. And the reason for it is breakouts tend to not always work well. They tend to be head fakes in many cases. Yeah. Right? You break out, you get above or below that support resistance line, and then you just move right back away from it again to where it came from. If I can get the entry right here, my stop is going to be here as an example, right? Just to pick an area. Let's say right area is going to be my stop. Well, that's if I take the entry here, or if I take the entry down here, my stop is still going to be right here on either one. So why take the breakout? I'll wait for the retest and the fail. And I hear, but Rob, what if you miss it? What if it just keeps running and you never get the trade? Okay, that's fine. I'm okay with that. Am I going to take every trade? Nope, I'm not. We've got a couple hundred trades under our belt in power option plays this year. Did I take every trade that was out there? No, not at all. You know, we take 6, 8, 10 trades a week, whatever it is, whatever shows up, we take, right? And there are weeks we take none or 1 or 2. And then there's 1 week we took 20 trades in a week, right? So I want the setup there. Once I get that setup, Spencer, the rules are exactly the same. My target one is going to be right here about 119. It's my first exit. So T1. Target 2 is going to be right about 115, 114 and 3/4. Somewhere around there is going to be target 2. And my initial stop is going to be easy math, right about 25% of the distance of those two lines. So I'll make this easy. This is, let's call it $8 to make it simple math. We'd be about $2 above, so right about 125 is where my stop would be. That's it. Now what do? I set this up and I walk away. If my target one is hit, my stop is going to cancel. I'm going to go and put a new target in and a new stop. And if that triggers either side, the trade is over and I'm done. I don't have to watch it. I don't have to sit there and babysit it. I don't have to sit there and emotionally, chewing on my fingernail saying, oh my God, should I get out? Should I stay? Should I hold? Should I get out?
I like that because I've caught myself doing this a lot when you just pull it up on, even if you don't actually want to do anything, just having it up on the screen, it just makes you like, oh wait, should I go now? Should I do it now? And like, even if you knew you wanted to like, oh, I was gonna hold this thing until X happened or until Y happened, but it's up there and you're staring at it and you're like, oh, but what if I just did it? I could just do it now real fast, and it messes with everything. So yeah,
it's bad, and phones make it worse, right? Because you're just hanging out somewhere. You got a few minutes at a doctor's appointment. You're looking online, and all of a sudden you're trading on your phone, right? And I'm a culprit with it as well. I mean, I've done the same things. Actually, my cardiologist and I became friendly beyond just doctor-patient because he's a big Tesla investor. And he saw me with my phone in his waiting room, his examination room. And I'm looking at my phone. He walked in without knocking. I've got a chart up on there, and it happened to be Tesla. And we spoke for an hour before he did his work on me, before he did any kind of checkup for me.
Right. So you're the reason why I'm always sitting in the doctor's office, and it takes the guy an hour to.
Wait, what's the old cliche? That's like one of the most cliche things I've ever heard, Rob. Just like doctors and trading stocks. Like Like I feel like fun. Like people on Wall Street love to make fun of doctors.
I saw a whole like conference, like there's like a whole like business or like website, like based on like this guy's basically, I'm like, any doctors that are into investing stock trading, he's like there, you know, he runs like a website, like in like MD.
I know who you're talking about.
Yeah.
I forget his name, but I know who you're talking about.
I thought it was interesting.
He's a financial advisor.
Yeah, for doctors. Like, that's a great idea. Yeah. Like you just find a niche market. He holds conferences where it's a bunch of doctors come around and talk about their stocks.
Yep.
I can't tell you how many doctors used to show up at our live events pre-COVID. And you would ask them, you ask anybody that comes to the event, what is it you're trying to get out of this? And it's two answers, one of two. They want more money or more time. And a person with no money, right? I need money, right? I have no money. I need more money. They usually have the time, right? Whereas the person with the money, the doctor, they don't have the time. So they can't sit and watch and day trade all day long. They need a strategy that they can enter and walk away from. Right. And that's where things like covered calls come in and some of the spreads come in, where you set it up, you walk away, you put all your exits in place, and then you're position one in the chair. You're back here. And you're just waiting now. Whatever happens, happens. Your phone will ding when a trigger hit and you're done. Right. And option strategies work out extremely well for them because they don't have to sit. Long-term buy and hold is a great strategy, right? When the market's going up. But who's long-term buy and hold right now with as choppy and as wicked as the market's been, especially when every third news story that comes out these days seems to be, will Russia attack with nuclear weapons? That brings the height right back up.
But buy and hold is fun on the way up. On the way down, it's not so fun anymore. But although if you really are like buy and hold, like for example in your retirement accounts or whatever, you should be rooting for lower prices. That's good for you. Yes. Lower prices is good. I remember when I when Benzinga started its 401k program, for the first 6 months, my balance was lower than my contributions because the market was going down. Right. And I kept on buying more. But that's what you want if you're talking about 20 years, 30 years down the line. Obviously, shorter time horizons, you don't want that. But the true long-term investors among us, you should be rooting for the market to go down or go sideways. That's what you want.
Listen, here's the strategy, guys. You buy the SPY in your 401ks, your IRA accounts.
Yeah.
You sell covered calls against it to take the premium.
Yeah,
and you take that premium and you buy a protective put.
Oh my gosh! Oh my gosh! Now we're really
so wait, but wouldn't selling the covered calls and buying the puts just offset each other, and then you're back to where you were with just owning the SPY? Or no, because then you're protected to the downside with the put.
Bingo. Covered call, as long as it doesn't go up too much, right? As long as it doesn't go up too much, I keep the SPY. And if it goes down, instead of the 50% haircuts we've seen in the past in 2000 and 2008, you were looking more like 8 or 10% haircut.
So hold on. So you're selling the call to protect the long position, and you're buying the put to protect the call position.
So you're no. You're buying the put to protect the long position of your SPY.
Okay.
You're just selling the covered calls to pay for the put.
Oh, okay.
Correct.
Okay. Got it.
I don't want to pay for that in my pocket. Right.
Right.
Go back to CRM to Banoff, right? When he negotiated on how he got paid on a sale and put not Banoff, sorry, it was Mark Cuban. When it came to Yahoo and he was selling his business, they wanted to give him shares, and he negotiated. And he tried to figure out how not to have it go against him if it dropped, which of course it did. And that strategy, if you read up on him, you'll see that one of his advisors came up with for him the buy the long put, sell the call against Yahoo, and pay for the put. And instead of losing what would have been 3/4 of his sale, he made very little risk in that trade at all.
Yeah, and he made his life.
It's a hedge factor. It's just a hedge factor. How do I like offset that and protect?
And there are even I don't know how available they are, but there are even some like funds, Robert, that you can invest in that are kind of like actively managed funds that are doing some of these hedging through options. You can get like exposure to funds that are doing covered calls on the S&P 500. So that's something
oh yeah, there are covered call ETFs out there.
I know. I'm curious though, like
you.
if there's one specifically with this strategy that Rob's talking about, because if there's not, that could be an opportunity. You know, say like, okay, we can manage this fund and sell it, and who knows.
We did a one-on-one training in our office with a broker who came to New York. I flew one of our other coaches in, who's a CMT, and he has his own fund. And of course, I'm not going to say who he is, but it's about $60 million. So he's a smaller guy. And he went out on his own. Instead of just wanting to buy and hold for his clients, he learned how to trade options. So he wants to know how he does covered calls for his clients. And he wasn't worried about, how to do covered calls. He understands the strategy completely. It was more of, I'm not buying 100 shares and selling a contract. I'm buying, 28,000 shares and selling 280 contracts. How does that affect the market? Right? He was looking at it from that perspective. So there are people out there that do it. Whether they do it in large fashion or not, I'm not sure. I don't want to say hesitation. That's not the word. But the only thing to always consider with a mutual fund are costs. And most of the costs are hidden. You don't even know they're there. Right? Just turnover ratios and things like that can get very high on some of these funds. So you just have to be careful on what your costs are.
Always take a look. If you're going to buy a fund, in whatever account, it doesn't matter, whatever trade, however long your time horizon is, always look at the expense ratio. Look at to see if there is like load fees or 12B1 fees, or if it's a mutual fund or whatever. Always, fees are like the number one killer of alpha. It's fees. Fees will eat. It's death by 1,000 cuts, and they will slowly eat away at your gains, and for nothing. You're giving away money, right?
Very much so.
Money.
I couldn't agree more. It is brutal. I haven't owned a mutual fund in probably close to 20 years. Yeah. And even for my kids, my nephew, whose accounts I've managed actively, my girls who are now working full time, they've got money in their 401ks, nurse and teacher, and they don't have a choice. My wife, 401k, she doesn't have a choice.
Dude, I'm the same way. My dad set up my Roth for me when I was young, and my Roth is at T Rowe Price, and I don't actually think that I'm able to buy ETFs. I can only buy a mutual fund. It's very annoying. Unless I'm doing it wrong. Maybe I'm doing it wrong. Maybe I should call
you can move it. It's pretty simple to move.
I know I could move it, but
it's the mode. It's an annoyance. It's switching cell phone providers. That's exactly what it is, right?
Yeah, I know. It's switching your bank is just such a hassle. I've been wanting to switch my bank for like a decade, and I just haven't gotten around to it yet. It's just because it's just such a pain in the butt. I don't want to do it.
I just moved some assets from my dad's inheritance over to Ameritrade, which I've had an account with them for a long time, never really done much with it. I figured if I put a little more assets in there, maybe I'll start to use it. And we're still playing games, going back and forth with them a little bit. The company it came from, they've definitely been making it hard to switch, but what should have taken 3 weeks has taken 3 months to move the assets. But
I feel like the blockchain has to fix this. The blockchain surely can fix this somehow, some way. I don't know how yet, but it could. Before we let you go, I just wanted to take a quick gander at Tesla. How we're looking out there, 887. Sure. All right, so new low of the day just there. New low of the day in Tesla. Yeah, man.
I think this is, listen, I like that it's coming down, but I don't see this as being an issue. It's reaction to what's going on with Twitter, I'm sure. And part of it is if he comes out and says, we're hiring a CEO and I'm just going to be on the board, I think that would solve a lot. But the fear that he may step away and put more time into another company may be a big part of it.
Or maybe even have to sell some shares to pay for it, which, we don't know that he doesn't have to do that. He may not have to, but we don't know that.
In an interview I heard, he was just granted another $15 billion in options on Tesla for hitting a target. And that $15 billion is what he was going to be able to use. He doesn't have to cash it in, but he could pledge it towards the purchase and not have to come up with any cash for it. So timing was pretty interesting that it happened out that way. But Listen, there's a fib line right below at 876, which is the 618, the most important line on this chart. If we can make it down to that line, today, tomorrow, and get a bounce, there's opportunity, a bullish trade up to 946. If we break it, then you're looking at 789 as the downside trade. Break, retest, fail. Right?
This is pretty remarkable. Because it took Tesla, so from March 18th, 18th to it took Tesla a week to go from 8 to make these gains, right? To go from the high 800s to 1,000, and
right.
it just gave it back in a day. So
yeah, it's interesting. I mean, $111. They're definitely getting punished for it today.
Yeah, pretty
right.
brutal.
And I've got some of our students that this is one of the major stocks they trade, so they're on it. I mean, it's had some good opportunities, pivot points, and just retests and look left. And there's a lot of support and resistance levels that we're breaking through.
Yeah,
for sure.
And Rob, you want to give your thoughts on Netflix before we go? There's a comment in the chat about it. And so the comment was from Mick Silva. It was Netflix collapse. Is Tesla next? Someone else was like, how are Tesla and Netflix related? Netflix and Tesla are related in the eyes of the stock market because they are both mega cap tech stock. Well, maybe not mega cap anymore for Netflix, but big name tech stocks in the S&P 500. There is a correlation there. They can trade together, certainly. Their businesses are not related in any way, shape, or form, but the stocks can trade together. We see this with tech a lot. So Netflix has made its move already. I haven't looked at it today at all. I'm imagining it's down. It is. Oh, 200. Oh my goodness. Is it going to get below? It got below 200 once. Oh my goodness. I didn't realize that.
So
I didn't realize. Wow.
Are you able to see this faint purple line in the back?
Yeah.
All right. Let me try to darken it just a little bit.
I think so.
Okay. Well, let me see if I can make it. No, it's definitely gotta be that, but let's make it thick. Okay, there we go. Now you can see it. Okay, for sure. All right. The candlestick chart you see in the back is Netflix. The purple line is Tesla. So you could see that there's a correlation, not always, but there's a correlation at times on where that tends to trade, where here Tesla took off, Netflix was in a sideways motion. Tesla's coming down right now. Netflix has come down a little bit earlier. They've been coming down since about this peak on Tesla, right? Which I guess Tesla's been coming down too. But the biggest drop in the last couple of days has come in right here. So you can see that there is definitely some correlation between the two of them. But they don't always trade, in lockstep, but they do have, bullish move, right? So there's definitely opportunity there. If you're looking at combining companies together to see, is there a correlation between one and the next? This is one of the ways we do it. It's a comparison symbol that you can put up on the chart. Right, works extremely well, right? Yeah. So, guys, that zero line breakout trade, I can give you a couple of candidates if you guys just want to write them down real quick. Is that okay?
Yeah, what do we got?
Let me just shift over to another chart so I get rid of the Tesla there. Costco, COST.
Is it still going up? No. Okay. Wow. It stopped going up finally.
Exactly. That pullback is great. Guys, if we can close here, bounce off that 561 tomorrow, you got 578 and 595 as upside resistance levels. And look at how much confluence there is at that 577, 73 level. I've got the 8 and the 21 moving average sitting right there. So bumping your head on ugly. There's a lot of resistance. Take half the trade-off just underneath that level. And look, if it does run the second half up near that 94, 93 level, 593. This is a great opportunity for tomorrow. It's top one on my list for this trade setup. And Spencer, on the website that you guys have for us, tradinglikeaboss.com, we actually have guys, we send these out every week to students of, hey, this is a trade that is set up. We send you an email or a text that there's a new one out there. You can go watch the video training on it. It's only about 3 to 5 minutes long at a time. But you'll know when the new ones come out. So if you guys put that link in there, you can go and take a look at that. It's pretty easy and straightforward on how to trade it. There's also a training video on trading these as well. But Costco is one of them. Microsoft is another one, right? Microsoft broke down, came back today.
Just FYI, they have earnings tonight, Rob. So
yes, they do. So we're going to watch, and that's why we're not trading them today. We're waiting to see for tomorrow. If I get that fail off of there or that pullback and fail, we'll take that trade. But yes, you definitely want to watch earnings. That E right there is it, right? But this is another one that's setting up, right, for that break. And you've got Johnson & Johnson. We'll leave it at that with J&J. Right? We had the nice breakout, the retest. If you can get that bounce off the 184, you're looking at 188 and 192 as your resistance level. So there's a lot of opportunity up there.
Okay. Costco, Microsoft, J&J. Those are our three.
Correct.
Alrighty. We'll have to keep an eye on those tomorrow. That Costco chart has me intrigued because I've been waiting for a pullback. I didn't realize that it had pulled back that much.
And the thing about them is that this happens over and over again, where we get these huge runs, we finally get some hesitation, and we get more huge runs. It just seems to keep stepping. Sorry for the mess on the chart, but they've
no. This is good. I like this.
They've run forever.
Yeah. I mean, I freaking I love Costco. I love like the store. The stocks too. I don't own the stock at all, but I love the store.
I'm a big fan of them as a company. I think it's well run, and their stores are good. So
I go to Costco basically like the first weekend of every month, and I love that place. So I will have this on my radar tomorrow.
Good.
All right. Good. Robert Roy, tradinglikeaboss.com. Always a pleasure, sir.
Perfect. Thanks guys.
All righty.
Have a great rest of your day.
You too.
You do the same.
All right. So we actually don't have a guest lined up at 1:30. We did, but we had to push that till tomorrow. So, and on top of that, we don't have a live roadmap today. So what are
you saying, Spence?
What should we do now? Is what I was saying. You want to take a few minutes to hang out with the chat and then call it a day?
Call it a day. Yeah, I think that's probably best for today. I have a 2 p.m. call with the guest tomorrow where we're just going to go through some, technical. I'm going to walk him through the stream, so hopefully his audio and video.
Speaking of upcoming guests, do you want to tease who that is, or do you want to leave it for tomorrow?
For tomorrow, we have the CEO.
This is exciting.
Of RCI Hospitality, who also recently announced some news with our buddy Mark Moran over at Liquidity. So what they're going to do is RCI is actually going to host its earnings calls on Twitter Space with Liquidity. So it's kind of along that trend of companies trying to get more connected with the retail investors instead of just these like institutional investors and financial advisors, what have you. So I like that. Any company that's willing to embrace kind of this new model of direct to the retail investor instead of bypassing through the institutional investors. But for people unfamiliar, so RCI Hospitality is kind of a
Rick is your ticker.
Rick is your ticker. RICK. It's kind of a real estate play. The company owns and operates gentlemen's clubs throughout the country.
This is going to be interesting.
So interesting. I think this industry, Spencer, is actually one that holds up in times of recession.
Wait. Someone just drove over the curb. Someone just drove over the curb right behind. I just looked behind me. I just saw this truck just drive over the curb. Anyway, sorry. Continue.
I was just saying. I think it's this could be like a recession-proof industry.
I don't know about that.
I don't know. I'll have to do some more digging. I know like drinking, like alcohol is particular, which I think we're going to talk to Rick's CEO tomorrow and ask them kind of like where a lot of the revenue is coming from. Is it from the real estate properties increasing in value? Is it from alcohol sales? Is it from
I feel like I remember
ATM fees?
Because I've think I've read things about maybe I'm imagining this, but I feel like after the Great Recession, there was like a massive just downturn in like people going to like clubs.
Okay.
And I don't know.
I like I said, I have a call. We have a prep call today. Do some more research, and then on Friday, have we announced?
Friday's big. Yeah, we have announced it. We're going to be talking to the CFO of Qualcomm on this show Friday at noon. You have a question for the CFO of Qualcomm? Email us, shows@benzinga.com.
Cool. All right, guys. Smash the like. Leave us a comment.
Send us an email if you have any feedback at all, good, bad, otherwise.
My only thoughts on
you love us, you hate us.
Yeah, good, bad, the ugly. Vape King saying Rick is a sell on Zach's research. Well, maybe we can ask him about that. Who knows?
Who's Zach?
Zach.
I'm just kidding.
What was I gonna say? Oh, my only thoughts on the earnings today. I'm playing.
And we know you're in Google.
I know. I mentioned that I had been doing some kind of preliminary research on different data points in terms of advertising, and I'm not playing Microsoft because I'm a little more worried. So I don't know if you've looked into it, but Microsoft's
I haven't.
Azure has been kind of slowing down its growth.
What? You can't do that.
I know, so that's why I'm not playing. That's why I'm playing Microsoft. If I had to guess, I'd guess that Microsoft and Google both beat and are both trading higher tomorrow. But I'm more convicted that Google will than Microsoft. So I'm playing Google, not Microsoft.
Okay. Google would seem like the relatively safe trade of the bunch. Reminder: we will be streaming the Google, or should we say Alphabet, earnings conference call 5 p.m. today, Eastern time, right here, youtube.com/Benzinga. We'll have the conference call going. Come hang out with us and listen to that. I'm sure you'll be there, Aaron, because you have a vested interest now.
Yeah, and I might even make this a whale play in between. It's 1:30 right now. I have like 2.5 hours.
Gosh.
It might be one of those things where if
oh gosh,
you know the Tiger King meme where he's like, "How will I ever financially recover?"
That's going to be you tomorrow morning.
If Google opens lower, if it opens higher, then I'm like, lunch on me today, boys.
All right. Good luck to you. I'll catch you guys in 2 hours for out the close. Until then, that's a wrap. Have a great rest of your day, and
woo! Stay green. Stay happy.
Here's that calendar tonight.
Stay nimble out there.